With global inflation rate expected to go higher this year, a lot of people are going to face financial hurdles. But despite these concerns, there are still people out there that are optimistic and are making investments to either earn passive income, hedge against inflation, or improve personal net worth. Welcome to Money Talk, where we discuss tips on making money. And for this video, we are going to talk about 2022 investing advice from Wall Street Millionaires. But before we begin, don't forget to hit that like button, hit subscribe, and click that notification bell to receive updates and be the first to check out our latest videos. A lot of experts consider inflation as the biggest risk to the economy. But this seems to not deter some people who have more positive economic outlook, especially the younger generation. After all, they acknowledge that investing can help you make more money, help pay for your retirement, or even get you out of a tight spot financially. It can be a great way for you to reach your financial goals and gives you more buying power over time. Investing can help you get rich, but you need to weigh the potential gains against the risk, and you'll want to be in a good financial position to do so. This means that your debt should be manageable. You should have a good emergency fund and be able to ride out the market's ups and downs without needing to use your money. According to some millionaires on Wall Street, a good way to grow your investments is to become more active in the market. There are many ways to invest, which include money market accounts, which are very safe, corporate bonds, which are a bit riskier, and stock index funds, which are even riskier. But that's a good thing, because it means you can find investments that offer different returns and fit your risk profile. If you haven't invested in anything yet, then this is the time to start doing it. As a response to inflation, more people are buying stocks and fixed income assets. A lot of Wall Street millionaires invest in ETFs, mutual funds, and index funds, among others. They are also checking out and investing in great companies like Tesla and Amazon, since these will still be rocketing to all-time highs even after 5 or 8 years from now. And since they are more active in the market, they are less likely to have higher amounts of cash. The other route that is common for younger millionaires is investing in cryptocurrency. But considering its volatility, it is always best to proceed cautiously before investing. A lot of these coins might just collapse in the end, but there are some that will not only survive the crypto apocalypse, but both fundamental and technical research shows that they have extraordinary potential and will evolve into the largest and most valuable crypto networks. But before we go into the coins that are the most ideal to invest in, I'm curious if you guys are investing in cryptocurrency as well. What coins are you invested in? How did you start? And how is your journey so far? Let us know in the comments below. And while you're there, don't forget to subscribe to our channel. Now, let's get back to the video. Included in the list is Bitcoin, which is considered to be the best long-term crypto investment. It is the one that started it all, and is the pioneer cryptocurrency designed to replace fiat currencies. A lot of people consider this as a hedge against traditional investments, and people are still investing in it despite its massively volatile price action. Ethereum is also another option and is a very promising crypto investment. Launched in 2015, it has now become the largest smart contract and DeFi platform. It has become the home to a lot of emerging crypto technologies, which include DeFi apps, dApps, NFTs, meme currencies, Web3 apps or programs, and decentralized exchanges. Another good tip from Wall Street millionaires is buying the dip. If you're confused, the term buying the dip means buying a stock or an index after it has fallen in value. Buying the dip is typically a response to short-term price fluctuations and is not typically connected with long-term investing. If you opted to purchase shares based only on the recent decline on stock price, you are engaged in market timing. In practice, buying the dips means keeping some cash or low-risk liquid assets out of the market and waiting for prices to go down. In this case, prices refers to how much stocks, bonds, index funds, and even cryptocurrencies are worth on the market. Once the price of the asset you are keeping an eye on goes down, you use all or some of the cash you've been holding to buy more of the asset. This lowers your overall average cost and can help you make more money if you keep the asset for a long time and its value keeps going up. Now, some people might say that investing is not something you should do right now because of inflation and the crisis brought about by the COVID-19 pandemic. The recent volatility in the stock market has been frightening for some investors, particularly younger ones who are just starting to save for the long term. Nonetheless, financial experts believe that now is an excellent moment for consumers to start investing or to continue investing in equities. It is very ideal for investing newbies to invest during a time that is very critical because they will be able to take a long view of the situation and will have the idea to have an investment plan that spans not just months, but years. Most of the time, the best days on the stock market come after the worst lumps. If you keep putting money into the market even when prices are going down, you set yourself up for big gains when prices go up. No matter how far away you are from retirement, that can set you up for success in the long run. And with that, you will be certain that you will have financial security regardless of what happens. Investing gives you financial security now and in the future. It lets you grow your wealth and get returns that beat inflation at the same time. You can also use the power of compounding to help you. Investing can also help you reach financial goals, such as buying a house, saving for retirement, or building an emergency fund. Among other things, it will help you learn to be responsible with your money because you have to set aside a certain amount every month or every year for your investments. There's no better time to learn about the market and invest and trade the market than during a crisis because the volatility makes for a great learning experience. If you're an investor looking to get into the market for the first time, you've got to learn how to do this. You can make money on an up market and a down market. Markets do go up and down. You can start investing at any time. You might be well into middle age before you realize that life is moving fast and that you need a plan for old age and retirement. If you wait too long to set investment goals, fear can take over, but that should go away once you start moving forward with a plan. Remember that investing starts with the first dollar. No matter how old you are, how much money you make, or what your plans are, still, people who have been investing for decades have the upper hand because their growing wealth lets them live a lifestyle that most people can't afford. If you enjoyed this video, make sure to hit that thumbs up button, click subscribe, and hit the notification bell to receive updates on our latest videos. Also, feel free to leave us a comment. If you want to watch more videos, head on over to our channel to see more from Money Talk. See you!